Ticker is ASTS. The stock is AST Mobile. Take a look at this stock chart. It is absolutely ripping. Launching things into space is a very hot business. Running businesses on those launched items, also a very hot business. Here's our 2 minutes on ASTS stock from here. I want to be honest with the audience here. I was very biased on this pitch to the negative side, and here's why. Take a look at the enterprise value of ASTS, $1.4 billion 2 years ago. It is now $31 billion. The stock has 25x'd in the last couple of years, and look at revenue. Zero, only went to 19 million. They're losing a lot of money. This is where my bias came from, but I did do a deep dive into what ASTS is doing, what they want to do, and I saw a little bit more positivity when I did that. Here's what we saw. So let's take a look at what does ASTS do. Well, they launch satellites into space the same way that Starlink does, and they make a global cell phone coverage basis out of it. But what they do instead of Starlink, you go and instead of AT&T or instead of Verizon, you just subscribe to Starlink for 80, 100 bucks a month or whatever it is, right? ASTS does something different. They add to the carrier's package, making your cell phone global, right? ASTS is launching satellites, and for 10 bucks a month added to your current carrier's plan, they are selling you service that'll work anywhere in the globe. If you've been watching our videos and want to invest alongside us,
click the link in the comments, select your brokerage,
search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So my bias existed because I thought they were going to have to raise just a ton of capital to build satellites and send them into space, and the shareholder was going to get diluted over and over again. However, building satellites is only about $15 million. Sending them into space is only about $15 million. They only need about 250 satellites total. So somewhere between $8 and $12 billion is necessary against this $30 billion enterprise value. So yes, the shareholders are going to get diluted on a capital raise, but it's way, way less than I thought because it's way cheaper to build this business than I had thought. So at $10 a month, which isn't very much, how many subscribers do they need to make back the $8 to $12 billion in CapEx they need to spend to build the business? And the good news is it's actually possible. 89 million subs, compare that to 200 million subs for AT&T, 3 billion cell phones in the entire world, and all these connected devices that are coming on. So if they can get a lot of subscribers at $10 a month, essentially if they become the de facto add-on for global coverage for devices and for carriers, you can see ASTS doing well here. However, I think valuation-wise at $31 billion, you're really asking a lot, especially when you know there's at least $10 or $12 billion in CapEx coming in capital raises in front of you, the shareholder. We like it better than we thought we did, but we don't think it's a buy here. It's good to be back doing these post-Christmas. Thanks for everything that you guys do, all the likes and subscribes, and if there's anything you guys want to see, please let us know.